And the S&P 500 and NASDAQ just off their record highs. Our next guest says valuations for the S&P 500 are getting stretched here, but he's spotting signs that could point to continued economic growth and market gains. Joining me now, American Century Investments Senior Investment Director, Mike Rohde. All right, Mike, let's talk, the bulls abounding here are crazy.
Yep.
So what kind of tailwinds are we seeing in the market and the economy, according to you right now?
Yeah, I mean, the story has been AI for sure. This is deja vu to the last 2 years. The AI leader sort of basket of stocks is up about 66% so far this year. Yep. So yes, valuations are looking a little bit lofty versus history. Fundamentals remain really good. We believe that investors should look in areas that haven't kept up. So small caps, regional banks are down between 0 and 5% this year, are really inexpensive, under-owned, and there are several positive catalysts we believe that are going to start to kick in. Deregulation, the tax bill should help. You're going to see earnings growth. We believe you're going to see earnings growth really strong this year and into next year. And so you have accelerating earnings growth on a really low valuation. And that's a pretty good setup. Yep.
That's powerful. You talk about AI not being all of the story. What other sectors do you see doing really well?
Yeah, I mean, if you look at banks, banks have had 2 years of negative earnings growth. This year, we expect banks to grow nearly 10% earnings, and then into next year, they're very under-owned. They're trading 25% below valuation. Their historical valuation now being cheap is definitely not a thesis, but we have increasing M&A. I mentioned deregulation is going to help expand.
And the Trump administration is getting behind some of these regional stuff. I mean, they're doing things to help these companies. You have two recommendations here. UMB Financial, I hope I said that right. Yep. Home Bank shares. Why do you like these two stocks?
Yeah, UMB, based in Kansas City, did a big acquisition, closed earlier this year. We see 30% accretion, and we think that is underestimated by consensus. We think it's a great Midwest bank. And then Home Bank, based in Arkansas, great presence in Texas and Florida, one of the most well-run banks. Johnny Allison is the CEO. He's kind of the Jamie Dimon of regional banks. And they have a 3% dividend yield. So there's a pretty bad outcome baked into a lot of regional banks. And we think the reality is much better than what current valuations are expecting.
I always wonder about them because sometimes these are the institutions that get hurt when we have some kind of market meltdown that's uncontrollable. But you seem to have confidence that even in that kind of scenario, they could do well.
Yeah, we'd like to say, how high is the window you want to fall out of? They're already trading at a 25% discount to valuation. Nobody cares. And the reality is they are much higher quality. They've been overly regulated for over a decade. So credits are really good. And you have the dividend yield to support that. So again, the setup, it may not be AI where everything is exploding incredibly, but over time you want to go to areas that are inexpensive, higher quality, and you can be there for the inflection higher.
Slow and steady is winning your race.
That's
Mike,
right.
Thank you so much for coming in.
Thanks, Sherry.